got another chilly day here today.
Yeah, I know. It was
It
2
is,
days ago, it was, like, 65, and this morning when I left, it was 25. I'm like, "This is not right."
and it's windy. I think the wind hurts the worst,
Oh, totally.
but
What else is
it
going
does. I
on?
feel like it's that time of year. Yeah, what else we got going on? I feel like it's just been busy. We had some planning meetings the last couple days, which is good, but also exhausting at the same time. Just
And you're still
figuring out.
trying to be a dad to a newborn?
Yeah, we're working on that, but hey, I don't want to jinx it, but sleep is the least of our worries.
Okay.
She
Hey.
slept from in case the listeners are worried about my new daughter's sleeping habits, but she slept from 9:30, 10 to 5 a.m. straight.
Wow.
Woke up, fed, and was still sleeping when I went back down. I was still sleeping when I left at 7:30. So
Wow.
we're
That's
hoping, and we were
awesome.
thinking about adjusting the schedule, like our schedule based on this plan we're following. We're supposed to move the bedtime up a little bit, but I think my wife and I agreed that we're just gonna leave it as is since this is working.
Yeah.
If you can get even the
I
nights we
mean,
only get like
that's
5 straight, but then can get a couple after that. I mean, it's like
yeah, that's great. It doesn't have to
first
be all in a row.
first time parent, but I would say just the fact that she sleeps probably makes this 75% easier than it does for some people who like kids
Oh,
aren't
yeah.
sleeping and they're just totally drained.
Does she cry much otherwise? Like
She'll have like her moments, like what do they call it, the witching hour? Like
yeah,
she'll
right?
kind of have one in the evening, but then we'll be like, just go do a bath, and she kind of calms down and
Yeah.
then feeds and like not that last night she was pretty calm, but sometimes like the nights she's like the fussiest before bed are the times that she then sleeps the best. It's like she like wears
Oh,
herself out.
right. Yeah.
So I think we're doing a good job of sticking to a routine, and that's what I feel like
Yeah,
is the most
that makes
important.
it so much easier.
Yeah, it's easier for us, probably easier for her. So
Yeah. Babies love routines. They
yeah,
really do. They tell me. No, I'm just kidding.
yeah, that's what they say. That's what we're believing in
Yeah.
at the moment. But hey,
Okay, so
welcome
what
to everybody for to let's tune into the Retire While You Work podcast again this week. Myles Zueger here with Jeri and Agee, and I guess talking about a baby plan there kind of goes hand in hand with topic today, which is just generally speaking on financial plans and what are some of the biggest reasons that we see them fail um, or get off track, I should say. I think hopefully if it's a good, strong built plan, even if temporarily it's maybe off track, whether you're working with us or somebody else or doing it yourself and being able to rediscipline yourself to get things back on track. I think that a lot of it, there's some common themes in it. A lot of it probably comes down to, you could say, overspending or just kind of losing sight of things. But hopefully this topic can maybe help somebody who one is just concerned about that, concerned about retiring and running out of money. I think that's everybody's biggest concern. Or two, maybe somebody who's feeling like they're off track and trying to get back on track with their own personal plan.
yeah. I mean, I think one of the biggest things that can get you off track is the big, like, unexpected life events, like, a job loss or a divorce or a health issue, something like that are the big ones that can really throw you off. So, hopefully those don't, happen often, but you gotta plan for
Yeah,
them as
which is
well.
those are the tough ones because they're like,
You never know they're coming.
yeah, you never know they're coming. Really, I mean, it's like, yeah, you just don't expect, you don't go into a marriage expecting to get divorced, and you don't just
Right.
think about some major health thing that's going on. All just kind of pops up. But
Yeah.
I think those can throw a plan off. But I think the biggest thing is then you just need to, not that you're like entering a marriage saying, "Hey, we're going to get divorced," like let's plan for that, but having a plan, especially for the health stuff. And then I think it all comes back to a good, solid emergency fund for those ones, and having that in place so that you're not having to spend through investments or other cash or bonds or retirement plans and pull out from them and pay taxes or whatever it may be that I think, really derail a plan. Because if you maybe haven't saved up cash and it's like what happened in 2008. Nobody had cash. Nobody had just some general investment accounts. And so when they lost their job and needed to make mortgage payments, they were having to pull from their IRAs. And so when you pull money out of there, let's just say you have $100,000 in the IRA. Well, if you cash that thing out, 20 or 30,000 of that's just going straight to taxes.
Well, I mean,
And so
especially if
it
you're
gets
under
tough.
age 59 and a half and
Yeah.
you're
And there's a
paying
10%
10%
penalty
of the
extra on it. Yeah.
penalty. Yes, so that really gets you. I mean, obviously, if you've listened to us before, we talk about the 3 buckets of money, and the first one being your emergency fund, and typically we say, 6 to 12 months of living expenses in that, so if something like that does happen, you are covered. Other thing I would add to that is if you have investment accounts but they're all just retirement accounts, you can also do just a regular taxable account that's not a retirement account and put money in that, and it can be growing over the years, and that can also be like an extension of your emergency fund. So, if you don't have like 100,000 in your emergency fund, but it's something big, you could always take from there.
Yep. Yeah, and it's much more tax efficient. I mean, you get back what you put in without taxes, and then it's only at anywhere from, depending on income, anywhere from 0 to 20% maximum currently to pull the gains out of there. So it can be very tax efficient also, and just another layer to your plan to help. You can think of it as a long term savings bucket, or a lot of people might think of it as an extension in their emergency fund. So maybe they keep 6 to 12 months of cash in their emergency fund, and maybe they then keep 1 to 3, 4 years of cash or investments in here trying to grow, um, with the goal being not to touch it, but know that it's there in a bind.
Right. Um, oh, another thing that just speaking about investments that can really derail the plan is like panicking with, the things in the economy happen and the market starts to go down or something and panic selling happens and that can really mess your plan up.
Yeah, I mean, if you look back at like the history of the stock market, it's historically, when it's made lows, it has always come back to make new highs. So if you believe in the stock market, if the market is down, it should only be temporarily down. But I think when you have an event, the biggest one I think the last few years was COVID in like March of 2020. It felt like the world was ending. Nobody knew what was happening. Everybody was worried about their health. Stocks fell 30% in 30 days, basically. And it felt like the world was crashing down. And I think a lot of us felt that way, honestly. But you know, by the end of the year, the market had finished up 20%. So that was a 50% swing nearly, in the market in just about 9 months there. But the hard thing is, if you had sold during that pullback when the market was down, they'll say the worst time the market fell 30%, and you still don't feel great about things. Like, when are you ever going to hop back in? You're probably not going to
Right.
do it when it's up 10% because you think it's going to come back down. And then when it gets back to even, you probably think it's going to come back down again. And then it
Right.
finishes the year
And it
up
just keeps
20%,
growing and
and you
growing.
probably haven't gotten in. And now then you're here, then it gets hard to get back in because you think, well, this year it will go back down. And then, if you're speaking in present tense, you're now, 6 years out, which is crazy. It's been that long, but you're now close to 6 years out from them. And you maybe never got back in. And that is like what really throws off a financial plan. Whereas if you can just stay disciplined, have cash on the sidelines, maybe some bonds even that are easy access to, but just try and avoid at all costs selling the bond or the stocks if you're able to. Um, just be disciplined, as hard as it may be, even if that means turning off the news and never watching it, or losing the password to your online account of your investments so you can't look at them.
Yeah.
That's what you have to
And we have a
do.
lot we have a lot of clients that look at it every day and a lot of clients that never look at it. They still have the same needs and wants and stuff, but it's just personal, like,
Yep. I just got
how
off the
you
phone with
view
the
it.
client. Just got off the phone with the client before hopping on here, and he just said, he's like, I never get on. How did we do last year? And just a quick recap. It was Gave him a quick, 2-minute recap of how they did, and had a good year, and he's happy about that. And so it's like, and he said, well, he said his other comment was, well, it feels like if I'm watching the news that the world's crashing down. And I was like, sometimes you just got to turn it off. And we kind of had a
Yeah,
good
I
laugh
turn it
about
off a
that.
lot
Yeah.
lately. Um, I
I think that's
mean,
one
and
thing. I mean, I would say that's not, as I kind of joke about that, but I mean, if you're somebody who gets very stressed out by watching the news, especially the
oh,
financial
right.
news, like, turn that off, because
Yeah.
it's only going to stress you out more,
Mhm.
and stay off social media
Definitely.
and all that stuff.
Right. Um, Another, like, thing that can hurt, like a smaller thing, but well, one, we were just talking about when we talk to clients, like if you have investment accounts and you don't talk to your financial advisor regularly or once a year or whatever, and you kind of lose track of that plan y'all have come up with together, that can definitely throw it off because you're not, communicating or you're, skipping regular reviews or whatever. And that's, you should at least once a year check in with your financial advisor and see what they have to say.
Yeah, of course, yeah, at least once a year, and then especially I would say when you're feeling stressed or worried about things, like lean on us, lean on that person, whoever it may be, lean on a family member if they are who kind of provides thoughtful guidance to you. But just letting it ruminate in your head all day, like I'm probably guilty of with some things at time, but letting it ruminate in your head all day and not really having a sounding board to be able to bounce that off of, I mean, that you're just going to drive yourself crazy.
Even if it's things that like, I mean, I feel like we're good at making people feel comfortable enough where they, even if it's really personal or embarrassing, they're embarrassed about why they're in a certain situation. That is like even more of a reason to talk to your financial advisor so they can help with your plan and show you that, hey, it's not, the end of the world or whatever, and y'all can work something together.
Those are some, I mean, obviously I love working with all of our clients. I do think we have really great clients, but I think some of the most like maybe fulfilling are the ones that come in here very stressed and then work with us for 3, 6, 12 months, whatever it might be. And just like you kind of have that first or second follow-up review meeting with them and you can just like tell how much better they feel about things and like they have a plan and have people that they can talk to and get good advice from. Um, those are like the fun ones.
I mean, yeah, they literally get up and say, wow, I feel like so much better from when I was here 6 months ago, or even when I first walked in here today. And it's because we don't have those emotional ties necessarily with their money and their situation, and we can look at it from a calmer approach maybe.
Yeah, I heard like on a different podcast one time. It was like if you're ever like feeling stressed about something, like what you should do is, or if you're ever worried about something, you should talk to yourself like a friend. Like just think to yourself, like, what advice would I give to a friend? And if like
Oh, wow. Yeah.
and I like probably don't use it as best I should, but in the moment I was like, that is good advice. Cause if you're
That
like,
is good advice,
if
but
you know, if you're like,
I feel like I have a devil on my shoulder sometimes ignoring my good advice.
yeah. Cause I mean, you think about it, if you're like stressed about money and like, you're somebody who works with a financial advisor, well, that was a friend, you would be like talking to them and they'd be like, I'm so worried about my money and I'm gonna lose everything. The advice
Yeah,
that you would give
right.
them is probably like, "Well, have you talked to your advisor?" And they're like,
Mhm.
or
Yeah,
your
exactly.
investment person, and they're probably like, "Well, no." And your advice would be like, "Why don't you just call them?" You always
Mhm.
feel
Yeah,
better after you
absolutely.
talk to them. So it's like trying to think like, what advice can I give myself? And it's yeah, I like that. It's like give advice that you give to a friend, and it's
Yeah.
always like reasonable, rational thoughts and advice that you have versus like the crazy thoughts you have up in your head of the world's
Yeah,
ending.
right, right. That totally makes sense.
I think one of the other big things that is maybe just like external pressure or you hear friends like what your friends are doing with their money or their investments. I think a lot of times it's like not even necessarily like the keeping up with the Joneses thing, but just you hear about some investments that your friends are doing or some hot stocks that they made a bunch of money in, and it's like you feel like you need to be doing that also because you're missing out on it. But if it's like not every investment is right for every person,
Yeah,
and you just
right.
need to like trust and believe in your plan and what you're doing and feel that like you have a plan. I think feeling that way and not trying to compare yourself to everybody else is like, because you start doing that, I think you start making irrational decisions with your money, whether it's investing in some stocks that then go down 20%, then you're afraid to sell or trying to find another one to make that money up. I think just knowing you have a plan in place, feeling good about it goes much further than trying to pick the next hot stocks or
Yeah, for sure. Yeah, and that is I mean, the keeping up with the Joneses, that's a real thing that people struggle with too. I think that's like if they have that fancy car, why can't I? Or I mean, I don't know. That's like just a typical example, but it's lots of little things too, and social media doesn't help that at all.
For sure. I mean, yeah, because you see what millions of people are doing instead of the 25 people who you maybe would have saw it from 100 years ago. Um, and then, I mean, kind of like wrapping up here, it's like if you maybe are somebody who got off track, I don't think it's ever too late to get started. I think it's just kind of about it's like any other thing. If you're feeling like you made the wrong decision or need to get back on track with something, it's just about kind of admitting that to yourself. And then if you don't work with an advisor, finding somebody who you trust to and work with to help guide you through that. Or if you do work with an advisor, I think it's leaning on them. And maybe you're made some bad decisions and you're embarrassed to go see them because they feel like they're going to be mad at you. But I think the biggest thing is that they would love to see you. I mean, if it was us, we would love to see that person so that we can help them get back on track versus just watch them continue to spiral and feel like they're not taking our advice. I think coming back in, sitting down, resetting expectations, and really trying to get to a plan or get into a plan that or back on track, whatever it may be that you really believe in is the biggest first step that you can take.
Yeah, for sure.
What else, Jan?
Good.
What else do you have to?
No, I don't have anything to add. I mean, if anybody is listening out there and they need help, give us a call.
Yeah. Yeah,
So,
we'd
yeah,
love
no,
to
I think you summed it
either
up.
help you get a plan or get you back on track with one if you're feeling like a little bit lost or like maybe you just don't have that person who can help guide you. I think it's what fulfills us and what we're passionate about. I mean, this is what we do every day, and we're very passionate about it and helping people. And yeah, whether you're a client of ours who have ever felt that at any point in time or somebody looking for that, we'd love to help be that person.
Yeah, definitely.
Awesome. Well, I don't have anything else. So thanks
Yeah, me either.
for joining us on this episode of Retire While You Work, and we'll be back with you next week.
Thanks.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.